from undergrad in Christ University in Bangalore, and then did data science, PGDM with data science and finance here. This is our batch. I don't know if you know anybody here. It's not that clear too. But if you spot me, I can give you one Bitcoin right now.
Wow. Are you the one extreme right?
Yeah.
The one over there with specs.
Six.
Here.
Fourth
Yeah. Fourth one.
Fourth one. Fourth?
Which one?
Yeah. No,
ये वाला.
right. To the right.
ये वाला?
हाँ.
No, I'm not that handsome. No.
ऊपर से
Can I come closer?
You guys have 5 more seconds.
Can I come closer?
No, Bitcoin slips in.
So ऊपर से third.
Yeah. Third.
Each one select one person.
Then
हाँ.
great.
उसके बाजू में.
This guy was a great guy.
Each one select one person. We'll get the Bitcoin.
And then you divide it.
I know Shailesh still likes you. No.
So the center one.
No.
Is that you like behind Meghnad this time?
Correct. Yeah. 5 seconds are over. But yeah, I'm supporting him from behind. Yeah. But yeah, that's Abhinay sir. I don't know if you've met him.
No.
So that's Amresh sir, our favorite. That's Bhageshri ma'am. These three are some interesting people. And then yeah, that's the whole batch. Very interesting. So yeah, the whole conversation today is about how I've moved on from, let's say, from economics to data, and then now digital assets, which is also called crypto. But we call it digital assets to not sound scary. And then right now I'm working as a chief forward strategist at Deorukhkar Capital. It's a liquid hedge fund, sitting at about $400 million in assets. And then previously I was working at Kernel and State Labs, which I'll talk about later. But yeah, as I was saying, last thing to. So PL here. It doesn't move. Feels like the sides don't change.
Is it changing there?
So seems yeah. So quick PL here. Did BA Economics honors in Christ University. Now done PGDM in data science and finance 2 years back at Meghnad. After Meghnad, I got placed at Accenture, which was pretty interesting as well. But then I went one day in the office and I left because I had a standing offer from Kernel or State Labs actually, which was for a founders office associate there. Better pace, obviously. You know, the greedy mind was there. But yeah, so I went to Accenture for one day. That was for a data analyst role in the consumer insights. So that year, Accenture had come in and was supposed to hire for 5 people, but it ended up only choosing one. That was me. That's pretty interesting. And then, yeah. So, but then at the same time, I was interning at State Labs as a founders office intern. I interned there for 6 months while doing Meghnad. And then during that time, like, I was involved with investor relations, treasury management. We had a treasury of about $26 million. We made about $6 million in that 1 year. It was fantastic. And then, yeah, investor relations, a lot of marketing stuff, a lot of, let's say, general stuff out there, which grooms you as a person, like as a generalist. So generalist is a very big role which is used right now, but it's super fancy and good career outside. So yeah, at Stater, I was there almost like about 2 years, where I was the portfolio manager for the treasury of the company. It was about $30 million portfolio, 20% APR on an annual basis. After that, I got promoted to some subsidiary called Kernel. So Kernel was, let's say, Stater's subsidiary, where I became the DeFi lead. DeFi lead is nothing but like let's say somebody who will divert institutional capital into places which make money. So like let's say for example, imagine if Kernel was a mutual fund distributor. So for example, you have the BlackRock one coming in right now. You guys must have heard. So we are one of the BlackRocks of crypto, and then we get the funds, we divert that into other investment opportunities while guaranteeing promised returns to users. So yeah, scale that to about $1 billion in AUM. It's called TVL there. It's called Total Value Locked, but AUM in normal life. And then this was across like 9 chains. I don't know if you've heard of Ethereum, Arbitrum and all. So these are like different kind of chains and a lot of managed liquidity. So that was pretty interesting. I did that for almost like 2 years now, including internship, if you include like 3 years. And then now I'm working at Tulipa Capital, which is another level totally. Tulipa Capital is a liquid fund which has been running for almost 6 years now. These guys are based out of Netherlands, so you know why Tulipa comes in, because of the tulips. They're overseeing about $400 million in AUM across BTC, ETH and USD. Here we act as a proper hedge fund, where let's say kernel is more let's say stable and less volatile assets. But on Tulipa side, we work with more volatile pairs and more riskier trades, which is very interesting. Because if you guys saw what happened today in the markets, it was crazy because of the Trump's tariffs on China. Everything fell, almost like a lot of liquidations, almost like $1 billion worth of liquidation happened in crypto itself. In TradFi, I haven't checked, but then I'm pretty sure like my batchmates can talk about it. But it is super interesting. But luckily we were safe because we had different risk parameters which will come to later on. So yeah, we manage assets there, we deploy it for institutional investors and for let's say retail users as well. We tokenize securities. Now for example, you must have heard of the big Bitcoin ETF, right? The Ethereum ETF and all coming in. So let's say, since the fund is based out of Europe, we do that for European banks. Right? So if let's say a European bank wants to invest in a certain ETF, we are the middleman for it. And we manage that. So that's an easy job, this one's a tough one. And then comes yield strategies. So yield strategies when let's say once we get this TPL, once we get this money in, where do we invest that? Deciding that is where let's say most of the brain power goes in. And we do this across different strategies, almost like 10 of them right now. And all of these are backed by proper data analytics, which I'll come to later. Yeah, this is just a basic view of how a DeFi fund management works. This would be similar to how a mutual fund portfolio also works, where they evaluate stocks based on different geographies, based on different industries, and then what are the current seasonal changes, right? So now, for example, Diwali is coming up, so FMCG is booming like crazy. Because
Tax reduction and
Diwali is
consumption.
I know people buy consumption.
Consumption. Yeah. Tax reduction is a thing. Look, that was a very big factor, of course. But then FMCG is booming because of consumption intent. People know that, okay, yes, this stock is going to go up. So it's a basic thing, yeah. So yeah, I mean, it starts off with research. You identify opportunities across different blockchains. There you do it across industries. Then you deploy into those with structured vaults. Structured vaults are what we manage, where we decide, okay, yes, X amount goes into a certain strategy, Y amount goes into the Y amount goes into the other strategy, depending on risk parameters. Then we optimize them on a daily basis. So for example, you must have heard that mutual funds also manage their portfolio on a monthly or weekly basis. So it totally depends on, let's say, what their risk parameter is. Some portfolios are growth oriented, some portfolios are defense and bonds and debt and whatnot. So yeah, we do that there, we monitor the performance, and then at the end we report it to the normal common man and institutional investors. That's the whole process how it goes. DeFi is exactly where I work. DeFi is called decentralized finance. Has anybody heard of this? Okay. Decentralized, even I didn't know when I was in England. So, it's okay. Decentralized finance is where data makes crypto. Now, why I say this is because today, let's say just a case for you guys. Today, if I wanted to invest in a US ETF, I had about $1 million in my bank. Luckily, unluckily I don't yet. But then when I do, I want to invest today, sitting right now in India, in a Texas-based company. How do I do it? I have to go through government regulations. I have to pay tax in India. I have to pay tax in US. I have to probably pay. I also have to worry about the USD INR fluctuation. And then also, while getting the returns, I have to pay government the dividends, tax on dividends. So 4 levels of hierarchies that I need to cross just to invest in a simple stock that exists in Texas. Why do I want to invest there? Because probably I think like, okay, yes, oil is going to boom in the next 2 weeks. So yes, I want to put in money now. Something like the Diwali option. What DeFi does essentially is that even while you're sitting like in any corner of the world, you can essentially invest anywhere else without KYC, without any blockers from the real world. Like, and then that does not help when you're in US, because in US you have to like give a lot of tax stuff. But in India you can do all of that. So Yeah, basically like here what you do is that it's purely data-driven decisions. You see how is the portfolio done previously, where have they invested, how are they generating yield, so that you generate back into your portfolio. You look at the risk and volatility of the assets. Let's say if it's based on Bitcoin, ETH, or is it like an RWA. Now for example, there's a Nexus Seawoods Mall. Do you know it? Nexus is a very big, let's say like a property management company which is picking up malls in India. It comes from I think Blackstone. So Blackstone is the actual fund which has funded Nexus, and then Nexus is picking up these malls. It's huge. Nexus is now tokenizing the malls into crypto. So you can buy a share of the world of the mall through crypto, and that's DeFi. Like you don't have to. Sorry.
So I just wanted to know, but how is that value decided?
The value is decided by the rents that they pay. That how much is the property sold at.
Okay. So the
selling price. Same selling
Property
price.
price.
Property price. Yeah.
And that's converted into the current crypto spot
Current
price.
crypto spot price. Yeah. So it goes 1:1 there. The custodian, which is Nexus, will manage the 1:1 management. So they take care of the NAV calculations later on. So let's say if you are gaining like 10% on your rental income, automatically the price of your property increases by 10% on an annual basis.
So then, is there crypto? Like, do they get more coins every year?
No, the token
value.
token value accrues. So like for example, today also if you held like a stock which is growing 10% annually, you don't get more stocks. The value of the stock compounds, similar to that. So here you're just tokenizing the equity, let's say your ownership share. So yeah, that's super interesting. Now Nexus is doing that. We are trying to get a share of that. If we get a share of that deal, that's huge. But yeah, so risk and volatility assessment. This is done based on, let's say, what is the underlying asset, or let's say underlying yield source, where all of this is happening. Then something which we do is called smart contract evaluation and protocol scoring. Now, for example, I took a name of Nexus and Blackstone. These guys are tier 1 protocols, tier 1 companies which will never fail on payments. Right? But let's say if I was talking about, what is this, Loknath building? Lok Center. If I talk about Lok Center, and Lok Center wanted to tokenize Meghnad, Desai, and all of these offices, it's pretty sure that one of the offices might default in payment on a monthly basis. Right? So we would automatically score them at a B grade. So this is same as credit scoring on credit analysis. As it. So DeFi is essentially like a culmination of everything that exists in the real world, just into more of a, let's say, digital form. That's it. So A plus, B, A minus, B minus. Right now India was scored just A minus or B minus. Right?
Double B minus.
Double
B minus, yeah. And that was because of the political instability that was happening. So yeah, similar to that, we score companies underneath, and then we do their evaluation. This evaluation is based on audits. So for example, today if I'm putting money into one company, and the back end there's actually like a contract which is taking my money and then redeploying into something else. Right? So let's say if I'm giving Nexus 100 rupees to deploy on the mine, it's smart contracts. Like why is it called smart? Because it can work on itself. It's smart contracts have told me that okay, yes, Aditya, you will get one share of McDonald's at the mall. Right? So like that's what it does automatically. So it's like rebalancing the adjustments and then it's giving me yield back. So that's called smart contract evaluation. After that, once all of this is sorted, we see the yield, we see that okay, yes, performance has been stable, we see risk is being low, and the smart contracts are fine. We do deployments. Deployments are, let's say, where sometimes we raise capital. So as VCs, we sometimes raise capital from the European markets or the Gulf markets, where we tell them, okay, yes, we've done our research, you deploy with us, we'll take a small cut on the yields. Or else we deploy our own money, which is also quite good. At the end, I say, like, for any investment, like this is not just true for DeFi, but for any investment, you should know how to reduce noise coming from media. So now, for example, during this whole time of Operation Sindoor and whatnot, a lot of market movements had happened. But the mutual fund investors didn't even change their entire portfolio at all. They knew that these were short-term movements in the market, obviously very emotional, but then from a financial place, they are extremely minuscule in that sense. So yeah, so noise reduction from media is really important. if you guys do investments, please keep that in mind. There's a lot of psychology that comes into all of this. Now, so in the last, let's say, 4 years for me, 3.5 years for me, I've seen that crypto careers, or let's say, crypto careers in digital assets have expanded quite a bit. Now, working across State Labs, Kernel, which were founders office roles, I was involved with almost like all of these. And then Tulip was just like pure play finance. But yeah, in these there exists like something like finance and operations. This is more of business finance. So let's say financial planning. You guys must have heard of financial planning, modeling. Let's say sell side research. I would still call it this as sell side research. Investments and partnerships are, let's say, what buy side people do, where like let's say you are deploying the actual funds based on what the first category people have done. Right? So you see the research, you read them, and then you're like, okay, yes, let's go make this deal, let's do this M&A or whatever. Legal folks are just there to save our asses, which is great. Marketing and distribution, this is again like a very good factor here, because essentially there's a lot of free flowing capital in crypto. But if you want to really tap into those sources, you need a very good distribution team. This is like extremely important. And then the last comes human resources, which is really important for every single organization. And that's the Bitcoin. Crazy. Very cringy. Yeah. But yeah, this is where, let's say, I've seen the careers of people going in. And then courses like Meghnad Desai's PGDM, across economics, data, like they make you ready for the first two options like extremely well. I don't know if Prachi ma'am still teaching.
Yeah.
Prachi ma'am's teachings on investments, like on like the financial models and everything. That's fantastic for the second role. For finance and operations, you had one more sir who was teaching risk.
Patnayak sir, maybe.
Patnayak, I don't know. Like someone's there teaching risk, right? VAR and all that.
We are not able to recollect his name.
Yeah. Maybe he'll come later on.
Yeah.
He'll come later. But then yeah. So I mean, like for you guys, I feel like
Ameya sir?
Ameya sir, yeah, tall guy.
We haven't seen
you
him
haven't
yet.
met him. Yeah, very tall, very nice. Yeah, he runs his own educational institute also, where he teaches people for FRM, financial
Risk management.
Yeah, that's a very tough course as well. So yeah, like finance and operations and investments and partnerships. Like I think like PGDM from Meghnad is like fantastic. And then once you guys graduate, give me a call. Who?
For job.
For job, yeah. We don't make this money for no reason.
This is for like only this offer is only for finance people or equals.
It's all for everyone. I'm gonna come to that. DeFi 101. So now I'm just gonna teach you like just like basic of DeFi, which will make sense later on what task I have for you guys. Something that's interesting. DeFi 101 is, let's say, first we start with lending markets. Do you guys know banks? I hope so. Yeah. So these are just nothing but banks. Where let's say you deposit something and you borrow something against it, right? So for example, you can collateralize your house, and against that at an 80% LTV, you can borrow money and then you can deposit that for a shop, right? Simple as that. So like here, what we do is that we put in our ETH, BTC or whatever is yield bearing, and we borrow something else against it. So today, let's say if you deposit money, you get interest yields. How do you guys think like we make money on fixed deposits? Oh yeah, mine.
This is actually for the while you were teaching with the video with some.
Just make sure I look good. Okay?
Yeah.
But yeah, so how do you guys think we make money on our safety deposits, fixed deposits? Anyone?
So we lend money to the bank then into someone else makes it, they pay interest and we get a cut of it.
Exactly. That's how this works as well. But then you have some people like Vijay Mallya here, but like it's lesser.
But it's backed by any real assets, right?
It's backed by the asset itself. So like here today, for example, you're putting in 1 lakh rupees and you're getting 6% interest back. Because at the other side, they're paying like getting like probably 10%. Their bank is earning 4, we are getting 6.
So Nandan Nilekani said once that he had this idea of the way we have developed the whole Aadhaar and the digital assets across India. So he said that if we tokenize land, right, and then because land is 73% of the Indian assets are locked by land.
Yeah.
I'm not sure. Like it is.
Okay, I get that. Yeah.
Like, but that land is unused. Like we can't use that land to lend as a security to get money. Most of it online. So like he proposed an idea of tokenizing land and using that as a collateral to get money easily.
Yeah, that's pretty interesting. What do you think?
I think it's a very good idea because credit requirement in India is huge. Like for a MSME player, for example, I'm running a small factory and getting a loan quickly is very difficult for me because I have to go through a very long process.
No, but then, for example, if you're tokenizing someone else's land, which is like say today, for example, I have a land in Bhopal, 1 acre in Bhopal, which I want to just like give away. But there's no agriculture on it because the land is rotten.
But it will have some money, right?
It'll have some value for sure. Like for that 1 acre, I can pay like 5 lakh rupees and get it because it's in some village. So now let's say I put that up as a collateral. You're saying I, as the owner of the land, will get some money out of it, and then somebody else can use my collateral.
Yeah, it's like I don't know. It can have two options. First, it can be that tokenization can be used by a real bank. Like that we are using this, and if you are unable to pay the loan, we are going to sell that token to someone else who wants to buy it. Or
That's like the normal. That's how it happens normally, right?
Yeah.
So if I give my house, I don't pay the loan. They'll take my house, sell it to someone else.
But this will be much easier.
Yeah, this will be much easier. It's crypto. Obviously, it's easy.
And or if we can do this thing, like for example, if we can put that token into the open market, and we can ask people that you can buy a piece of that token,
Yeah.
right? And then the price of the token will be decided by the bids that
By the fragments that others. Yeah, exactly. That's a great idea. That's what Nexus Seafoods is doing, right? Or let's say Nexus, the company, is doing. Where let's say buying your entire mall is expensive, like really expensive, thousands of crores. But buying one toilet in the mall is super cheap. And if you take like a 1 rupee per person fee for just entering the mall, automatically you make a lot of money. I'm just giving an example. So that's a good idea. I mean, I don't know if he's already working on it.
I don't think he's working on the second idea. That was my idea.
You should work on it.
Yeah, sure.
Yeah.
So, like, in relation to what you said, so for the last year and a half, I was actually working at a company called Aquagraph. I was doing some research in a very niche field, it's like water economics.
Okay.
So basically what the company has done is, like, they've created the world's first digital water bank, and they started issuing water credits.
Okay,
Now
so
they
like
want-
tokens for water
Now they want to
like
start tokenization of those credits, distribute it, and can create a market for that.
market for it, right.
So, how much of that can actually happen on a crypto platform versus something that's more regulated and stuff like that? Because carbon credits have
already been coming. Yeah, they've actually been tokenizing it as well.
But the problem is that carbon measurements there have been like horrendous issues. Like people are just
There's
doing them.
no standard way of measuring them.
Yeah.
So
And what is happening is somebody has received credit for the work he has done, and it's being passed to thousands and thousands of individuals over and over, but there is no work being done for the other people.
for the yeah. No, that would definitely happen because in crypto, for example, or like say DeFi, you don't know who's holding the token. It could be a terrorist sitting in Afghanistan, or else a common man sitting in Mumbai. Right? Anybody can hold that token. Anybody can hold equity. But that's also a good thing. Let's say if Aquagraph is, let's say, out there to raise money, right? And it does not care where the money comes from. This is the best place. There's no KYC, no nothing. You just need to provide APR and return. So that's where DeFi comes in, where let's say you have complete anonymity out there. And especially like in the land side, if you wanted to tokenize this stuff, if you don't care about who the owner of the land is, it's fantastic. You just know the contract address of who owns it.
I'm still not understanding how you tokenize a real asset.
Like suppose there's a factory, there's a
Yeah.
land licensing. I still don't understand how can you tokenize the land.
So the land is owned by, let's say, one institution. So for example, in this case, ICICI owns that bank because someone else has given us as collateral. ICICI takes that bank, says that okay, yes, against this we can now give a loan to you. Right? On the other side, what it can also do is that, for example, if there was no owner, no original owner, ICICI is just the owner, it can say, okay, yes, we are raising money to buy this factory. We don't care where this money comes from. Right? You put in 100 rupees from anywhere, you get a share of that factory. Right? And then what you get essentially is a, like today for example, if you buy like Tata Motors.
So it's similar to raising a fund through an equity market.
Yeah, similar as that. And then once you hold that Tata Motors share, let's say that factory's share, that just keeps on compounding in value if the stock is doing well or if the factory is doing well. If it goes down, obviously you're at the risk of losing money.
And okay, sir, understood.
And then you can always redeem the money back. So let's say if today if I don't want the share and I want to redeem it for normal cash, I will go back to the bank, tell them, okay, this was my token, this is what it's valued right now, please give me back my actual INR.
So it's like a decentralized equity market.
Equity market, exactly. Yeah.
So day before yesterday, I went to the Global FinTech Fest, and I went to the Mastercard's arena that they created. So actually, one of their team from Singapore is working on this project, like tokenizing real assets.
RWA, real
Yeah.
world assets, yeah.
So they have this whole setup that, for example, if you're sitting in Mumbai, you want to buy a factory in, for example, Gurgaon, right? So you will have your whole the display of your financials. You can see that factory through the Apple Vision Pro, and then you can buy that instantly.
Instantly.
It's like shopping.
Right, you tap and buy.
Yeah.
For example, Zepto sold that Gurgaon plots, right?
Yes.
City guys,
Yeah.
yeah. That's also very interesting. But yeah, I mean, like a lot of companies are doing this because at the end of the day, it's money flow. Mastercard, everyone makes money on volume. They would make money from any shit out there. Right? So I mean, even I do. Like the amount that they're earning per transaction that we do is huge. We don't see that, but then it's actually there. And I think Prachi ma'am will also teach that. Like how does a credit card company actually make money when it's charging you zero fees? Like she teach you in detail.
But like they charge the retailer, right?
Retailer, yeah. And then in the middle there's also like a bank, bank that gives them merchant, and even the bank pays a little bit of fee. There's a ton of it.
And it's passed on to the customers ultimately, so they just say,
Yeah, we just don't see it. We just don't see it, yeah. It's interesting. Yeah. So, for example, in this case, what happens is that this is a decentralized bank. Anybody can come in and give a loan. I can be a Russian mafia guy putting in a loan for Indian equity. That's a great thing. Because Russian stocks are going down now, like crazy. So yeah, I mean, like this is where you actually can make money out of crypto. Where like you keep on collateralizing your assets, you keep on leveraging it, and then it's called leverage loops. For example, right now there's about $78 billion sitting on a website in crypto, which we don't realize. $78 billion. Yeah, so Aave, Compound, Morphosmart, these are, let's say, the top protocols out there, which give standardized loans and have proper borrow rates and supply rates. So, yeah. The risks here is that the only risk here is that, let's say, when you're actually doing collateral and then leverage, you buy a house, you put that up, you get a shop instead, and then you put that up also, and then you collateralize that also and leverage. What if the house crashes? There's an earthquake, and the house breaks down. Your first collateral that you put in has broken down. It's called liquidation. If a collateral value drops below the threshold. So now, for example, your original threshold is not there. How would you pay back the loans? You don't. The bank takes a certain cut, and it also takes up your entire collateral. You lose all your money, you leave crypto, you do farming. That was a joke. Yeah. I know one person who's done that. So, but he bought the farm before, so that was good. Yeah. But then liquidation risk, that's what happened. Smart contract exploits, let's say for example the token that you're depositing into the bank fails. So for example if it has some kind of a hack or something, that fails. And then variable interest rates. Now for example, if the bank only has about 100 rupees in assets, which it can provide as leverage. If I go there and borrow 90% of it, that is 90 rupees already, the borrow rate will spike like crazy because the bank does not have any other assets to supply to anybody else. So nobody else essentially can come into markets like RV, Compound, Morpho and so on. So that is essentially what hedge funds do. They play with these markets so that the normal investor like us do not get into this. Or like do not get into banks. So now for example, if a bank is offering a loan to Reliance or like Adani, it will offer it at 3% interest. Whereas for us, it will be like almost like 10 or 15% interest. The delta between that is what happens in the back end. But yeah, so RV Corporate Spark and lending markets deal is for 17 billion. Huge. And now there's about all of these ETFs, Bitcoin ETFs are also coming into this. So you can see this number almost like 2xing like in almost like 2 years. That's the estimate. Then you have something called liquidity pools. So now for example, what happens in the Indian markets is that on the Indian stock exchange is that first you have to KYC and get a demat account. Right? You have to get a demat account where, for example, the bank knows where exactly you live, what's your income, what's your father doing, where's your mother, and whatnot, right? In this case, what happens is that you don't need permission from anybody to sell or buy. So that's the best thing ever, right? Like for example, today I see or get like today I see that, okay, yes, I'm going to make a lot of money in Texas. I can just go out there and buy it without anybody noticing. Now that's called liquidity pool. The liquidity pool, what essentially it is that like it's a set of assets in a certain pool where like I can buy and sell between those assets itself. So now for example, I can sell ETH for Bitcoin and then vice versa without telling the government anything. But if you, let's say for example, today if I want to sell $1 million worth of shares of Reliance, I will first have to go and get permission of SEBI. Then I'll have to announce it out there that, okay, yes, Deorukhkar Capital is selling this block of funds. Only then I can go and sell it. So you guys must have heard like once Zomato's shares held by SoftBank were being sold in the market. They had to be announced before, like almost like 2-3 days before. Only then they were able to liquidate it. By the time they announced, the shares fell by 20%. That means the fund lost 20% of its actual realizable income. It was hilarious, yeah. But yeah, that's what does not happen here, which is great. The only risks here that we see, for example, is smart contract risk. Let's say, for example, again, your assets breaking out. Impermanent loss. So, for example, impermanent loss is, for example, if I am pairing a share of Reliance with a share of Tata Motors. If you pair these two assets together, but you should not, but like if you do, Reliance as a company is which industry it is? Which industry is it? Petroleum, right? So, and then petroleum income would be totally different from, let's say, what Tata Motors income is. So the yield that I get from holding Reliance would be completely different from what I get from Tata Motors, which is more stable, I guess. So yeah, I mean like this, because of this yield differential, your assets will keep fluctuating in that same pool. So that's called impermanent loss. You guys can check it out later on. It's super interesting. People make millions of dollars per day just by managing impermanent loss for hedge funds like us. What they do is that they just keep that 1:1 peg. How they do it? Because they're smart in math. It's $1 million game out there on a daily basis. It's huge, huge. One of my friends does this. It's sitting in India, sitting in Bangalore. He's a what? Engineering pass out. Crazy guy. Yeah, 5 crores per year.
What?
No real job. Yeah. It's interesting. Yeah, smart contract risk, and then you have low volume. So, like say for example, if the pair does not earn any volume, let's say if nobody is buying out their Reliance shares, then you holding it will not actually get you any trading fees. There's about 3 big protocols in this side. There's Uniswap, Balancer, Curve Finance. Uniswap was the first protocol to exist ever in crypto, first company as such, like a proper company. This itself was like about I think $15 billion. So you know exactly like the market share is crazy over there. Then Balancer came in, Curve Finance came in, they changed the game. But yeah, Uniswap was the OG, like I said. These guys are based out of Lisbon and Zug in Switzerland. Super interesting guys.
I just have a question. Say I want to buy a digital asset. So I don't need a demat account or anything.
No.
So when I want to buy it, I will be paying in the INR. I will be paying in the currency, right? So if I am doing the transfer of currency, won't the central banks or the government be able to trace that?
It depends on how are you going in. So for example, today if you're going through a CEX, which is called centralized exchange. For example, today we have Coin DCX, WazirX. You must have heard.
Coin D6 I've heard of.
Those guys central.
Saying that because Elon is going to be part of the.
Yeah,
It will
dudes,
go
yeah,
up,
fine. Yeah. But then it dumped, right?
Yeah.
It dumped really bad.
It was really bad.
But then those who bought Trump, they made about 20x in one day. So pretty juicy. Yeah. Sadly, I could not get to that. I was sleeping. That's why they say sleep is for the weak. Yeah. So yeah, this is what we do. So for example, vaults are, let's say, structured finance products where people like us can also deploy into institutional strategies. So for example, mutual fund. Right? Vaults is nothing but a mutual fund which has a culmination of different strategies underneath. Today you can deposit, let's say, 100 rupees in the BlackRock mutual fund that is coming, and that will deploy it across, like, I think it's a AI based equity fund is what Rishi Kohli is calling it, the guy, the CFO of the company. But yeah, so it will automatically put your money into yield strategies that aggregate, optimize, and reinvest users' funds. Right? So for example, we as a user does not need to understand what is DeFi, what are the risks out there. I can just go and do my finance job at Accenture, come back while someone else is making money for me. Right? And then these guys get a cut off. So they act like decentralized fund managers. You can anytime, any point of time, you can just put in money and withdraw money. You don't need to wait for anyone to give you an approval or let's say for their fund to actually finish their NAV calculation. So for example, what happens now in the BlackRock fund is that they are stopping investments by, I think, October end. So you can't invest any more into it. But rather you can buy, probably you will be able to buy a share of the investment fund later on, but it will be more expensive than deployment. But yeah, so we can do that. These vaults are always open. You can go into any of these websites and then just deploy funds. Right? Pretty interesting. Yearn Finance, Beefy, Enzyme, Turtle Club, these guys are mammoths of the entire field. Turtle Club by itself owns like about like $1 billion in assets. Pretty interesting.
So if these like places like Turtle Club, how have they accumulated all that Bitcoin, like all that crypto assets? So they have actually bought physical asset and then exchanged it for the digital asset, or how does it work?
No, someone who already had a physical asset deployed their money into them.
Okay.
So today, for example, we don't generate rupees. We get rupees from somewhere, we do our work, we get rupees from there. Then we put that into investment strategies like mutual funds. Similar to that, like an institution had let's say $1 million was in Bitcoin, and they were thinking that, okay, yes, I don't want to worry about my money. I wanted to earn passive yield somewhere. I could just deploy it into Turtle Club. And like structured finance products. So yeah, I mean, like Yearn Finance, Beefy, Enzyme, they do the same thing. What these guys do, and then what they have underneath is called vault curators, which are semi-vaults. So for example, you put it into one mutual fund strategy, you give money to ICICI, you tell it, now do anything you want with it. Right? ICICI has the opportunity to deploy it across different mutual fund types. So growth ho gaya, debt ho gaya, bond ho gaya, equity ho gaya, whatnot. So yeah, these guys allow you to do that. So for example, if you deploy $1 million here, it will then say, okay, yes, I want $100 million to go into Deorukhkar. I want $20 million to go into some other fund. And now even Blackstone is coming out with a DeFi fund. So that's pretty interesting. So yeah, this is where we stand. Well, let's say we go below the vault aggregators. The only risk on this side is that, let's say, what if the strategy fails? So now, for example, what has happened with the whole Trump thing tonight actually, a lot of these vault curators fell into trouble because they had a few assets which earn money through US Treasury bills. Whenever a decision taken by Trump happens, US Treasury bills rates fluctuate. Every single time you have a rate fluctuation happen, your collateral is at risk because it loses value, and then a liquidation happens. So let's say if I had deposited $1 million and I had looped it 10 times, that becomes $10 million approximately. If I'm borrowing at 100% LTV, I will lose this entire money because it's a liquidation happening. So because a lot of people had deposited into US Treasury bills, their entire strategy was not actually solid. They had like over-indexed on the US Treasury side. Entire thing failed. This was about like $1 billion. We have a few friends managing this fund. They're all in trouble now. But yeah, this is something that can happen very fast, even in the mutual fund market. Now, for example, if a mutual fund like Reliance is depositing to Reliance, and Reliance says, okay, yes, we have an NPA coming off 2,000 crores. Right? Suddenly, the Reliance share price will drop. And that's why they say mutual fund acha hai, ya sahi hai. But they don't say that it always makes money. You can lose money as well in mutual funds. They guarantee a 15% interest return annually, but then it's not, let's say, it's not guaranteed. They say it's 15%. So strategies can fail or get exploited. Gas or slippage, this is all bullshit. Centralized control. Now, for example, if Turtle Club goes rogue, right? It takes in your money, and then it says, okay, yes, we don't want to go anywhere. I'm going to take this money and then I'm going to send it to a Swiss bank. Go farming. This is what Turtle Club can do because it's not an autonomous body. It's centralized by the owners of the fund. So wherever you're putting money, please make sure that you know the mutual fund out there, or you know the vault curator out there. If you're deploying into a mutual fund, please read their entire strategy decks, and then their entire, and say who is the mutual fund manager. You should definitely look at the name of the manager and then what funds have they managed previously, because that gives you like a track record of it. A lot of funds do this, that they take in money and then they never come back, and then you only get like maybe like 50% of what you got. So yeah, there's about $12 billion in assets here. These guys are the ones who fund the liquidity pools and the lending markets, and they loop on top of that. So pretty interesting. This is where I work. Vault curators is where I work. Where we manage about 400 million. Only a 400 million out of $12 billion. So we're tiny, but we're making money. So, but yeah, you know what's the potential here. When I was in Meghnad, Desai, I was super dumb. Yeah. But then some things that, let's say, I picked up on when I started the internship was that, okay, so you have to be curious, really curious. What happens with Meghnad Desai is that we tend to stay in this bubble where we assume that everything's going fine. Companies will come at the end of the year, they will place you, and you're in perfect spot. Right? That might happen for sure for a lot of us, but then sometimes it doesn't happen. Sometimes there are cracks in the system, right? So you have to be curious about, let's say, what's happening out there. I don't mean that, okay, go into crypto. I'm saying stay curious about AI. Stay curious about the new these things. We say like ecological things, ecological funds out there which are coming up. New startups that are coming up. In fact, a lot of these fintech startups, which you must have seen, are coming up right now. So there's a ton out there. Like Slice, for example, if you guys have heard, Slice, which is a credit card company. 5 years back, it had nothing. 5 years back, it was tiny. You could just go in their office, they will hire you. But today, they are paying an analyst 14 lakh rupees. Just a basic business analyst based out of Bangalore or whatever. For 14 lakh rupees. Like one of my friends is doing that job. So stay curious. Stay curious about DeFi. Yeah.
Sorry to cut you off. I just wanted to ask something. You're talking about these new fintech companies coming every day. My question is, so like I'll just give an example of Zerola. So when those folks had started Zerola, there was a very big gap in the market, right?
Staying curious about what's coming up is very interesting. Perplexity was invented by an Indian guy sitting in the US. Their analyst hires are now paid 100K, which is about 85 lakh rupees on an annual basis, which is huge. People sitting in their homes doing remote work are earning that much. So you know what's the potential. And you guys get the right tools in Meghnad Desai. I would say it's sufficient, but not the best. But it's our duty to go beyond, right? Today, if you start like crypto or something, you ping me constantly every week. Hey dude, I want to get on a call. Hey dude, are you free for beer? Let's go. Let's get something out and then let's figure this out. If you have an AI guy, find a mentor. Find a mentor who does AI, chat with them on a monthly basis and bring like substantial topics, right? Second is network. So for example, this guy going to the FinTech Summit is huge because you must have gotten contacts. I hope you got contacts. Yeah, ऐसे नहीं कि उधर जाके फ्री में खाना खा के आ जाओ.
कुछ नहीं खाया.
कुछ नहीं. Yeah. तो मतलब you have to go out there, go to these events, go to there are sometimes club events which happen. Club events, let's say for example, the FinTech club in Mumbai has a meeting every month. So you can go there and actually attend as just a listener. Right? Just go there, say hi, I'm studying this. Would love to know about the project, go for a coffee and whatnot, and then probably it ends up with something nice. Or you have an idea. You have an idea that you can work on. It's something interesting. So yeah, network there, be adaptable because ChatGPT also has now Gemini, what is that? So, like so many other companies to fight against, Claude to fight against, right? Even though ChatGPT was first, it now faces problems of its own survival. So be adaptable. Today, for example, if companies like JP Morgan and all don't come to campus, go out there, network with them, ping them on LinkedIn. Say that, hey, I am studying this. I saw that JP Morgan's working on X project, which is this topic, and I know you're working on that team. Can we chat? That's one of the ways I got one of my projects as well. So that's super interesting because I read one of their articles and I pinged them about it and I told them, the CEO, I told them that, hey dude, I'm very interested. Can I get an internship here? Pay me nothing, but I'll just learn. At the end, they also gave a full-time offer, could we even take it? But yeah, that's what the game is, right? Be adaptable and just go out there and network. The last thing I would say is build data intuition. Now this is very crypto specific, yield, liquidity, correlation, risk exposure, or like finance focus. But understand how money moves, right? Understand how the business actually makes money. Okay? Like that, I think once you cross that, any business out there you can make money. Or like you understand, okay, yes, this is not money making business. This will have NPAs in the future. So I feel like this is huge, which is like something that I don't know if maybe Desai can teach, but like this comes from within. When you actually search for, okay, what is the yield source? How is this guy making 10% per annum? That's the questions you ask, right? Kitna risk hai, what is the correlation with different assets? If let's say I don't have a chance to invest in X asset, can I just invest in, if I don't have a chance to invest into Bajaj, can I just invest into Hero or something else and get the same amount of yields if I want, because I believe in the industry. Something like this. So yeah, I think like these, and learn fundamentals early, like this is just like learn everything about our industry out there once you get a knack of it. So for example, what happened with our batchmates is that they got placed into very good companies like EVA and whatnot. But then they had no idea about the industry that they're going in. Right? So if you have not done an internship or if you have not done your studies beforehand, you go into these jobs and you're like, oh shit, this does not work for me. Now there's a problem of switching cost that comes in. So when you switch from industry to industry, there's a huge switching cost because here you start off as an analyst, you say you go for a associate or a lower level manager. But once you switch from let's say AI to finance, automatically there's a very big switching cost that comes in. That comes into pay, that comes into your role and whatnot. So learn fundamentals early, understand okay, yes, this is the right fit for me and this is not. If you don't understand, ask your professors or reach out to LinkedIn, to alumni, because you have a lot now. But yeah, this is what I think is the top 5 things that I would say that you guys can look at, which have helped me in the last 3 years a lot, and then make good friends. I feel like that's like the biggest thing. Make good friends who tell you to do all this stuff. I don't know if you guys got a WhatsApp message today morning. Did you guys get something?
Yeah.
Right. So this is a small trading and yield farming competition. I won't say this will lead to a job in Deliver, but I'll just say this would lead to you guys having fun and checking out crypto once. And if it's your fit, it's fit, and then you guys text me, whatever. But yeah, essentially this will take you to a Google form. Does it take you to a Google form? Just tell me.
Yes.
And then it should ask you for your name, number, and email. What will essentially happen is that I will fund you guys with $100 each, whoever's into this. Amnesh sir has said that he wants to QC who's registering. So that's why we made this, or else in fact I was going to stay like over half an hour more and just set it up on you guys, on your phones, or like on your laptops. But yeah, what I'm going to do essentially is that I'm going to give you $100 each, which is about 8,500 rupees. You guys will use that to invest in any asset, or if you want just trade, just buy Bitcoin. Again, worry about where it goes. Don't worry about where it goes. It's free money. Who cares? There's just 20 of you in this class. That's $2,000. That's okay. We can make it in like a day. But yeah, what I want is that after a month, I want to see how your portfolios are done. I want to see if you guys had a chance to explore. If you did, come back to me with questions. Or like within the week also, come back to me with questions. Like tell me, okay, yes, Aditya, I've seen this. How do I deploy it? You guys saw a lot of protocols names.
What
Right
do you mean
now.
by that? Do you have prior experience in investing? As in like we invest ourselves?
We can invest in yourself. Yeah. So like for example, you guys saw a lot of companies here, right? You guys saw Balancer Curve, all these, and then Turtle and Tulipa as well. If you want to put $100 in the right place, put it in Tulipa. I'm just kidding. Yeah. But yeah, you guys saw a lot of companies here. And you can do your own research. I've also added like what's the link that I carry this data from. So essentially what I want from you guys is that take this $100, show me what you guys can do with it, or show yourself. Let's say if you are in a different field altogether, how capable are you to even like let's say explore it? Right? I'm not saying make $1 million for me. If you do, please give me a share of it, or give everybody a share of it. But go out there and explore. This is just like a small task. I know like classes now are hectic or what?
Yeah.
Not
Not for data science and finance people, it's for eco
Data science and finance
people.
is always hectic, yeah.
No, it's not hectic for them, it's hectic for us.
But yeah, so I mean, if you have some time, check it out. I give you guys a month. At the end of the month, I'll do like a portfolio rebalance, and then we'll see how much who's earned. Obviously, we can make it public if you want, but then if you don't want to make it public, that's okay. I'll have that in mind. Yeah.
I want to ask something. So, I had done an SIP and things of my own, but I have never invested myself. Like you know. So
Yeah, that's okay.
I come from ground zero at this point. So the money that you're giving me, you know, would you kind of you know give us a few pointers or steps that we could use?
I'll send you guys blogs or YouTube videos. Baki is on you. Obviously, I can't handhold and tell you.
No,
bro.
no,
Yeah. You know, like,
no, it's something to look out for. What factors?
I'll give you like basic stuff which you can read up in 5 minutes. It's not like you have to spend the entire day and do it. Right. And then we can do like a bi-weekly call or something where you guys can come up with questions. But yeah, this would be interesting. I don't know if you guys have explored crypto yet, but this is an okay way to explore it. $100 is not a small amount.
By using Coin-DCX?
No.
You only
I'll give you free money which you don't have to show the government.
Oh,
Don't record this, yeah.
It's only for crypto, right? You invest only.
हाँ bro, ये $100 निकाल के पिज्जा खाने जाएगा.
नहीं, but क्या मतलब?
Crypto only, yeah. Crypto only. Do whatever you want. You want to go into meme coins, put it into meme coins. Today, if you want to go buy Doge, like he said, go put it in Doge, bro. Lose that money if you, I don't care. But make use of it. Test it out. See how it works. And if it's a good fit for you, right? Because the same maths that you do for equity investments or let's say financial modeling investments that you do in traditional finance, the same math goes over here too. There's just like a few variables extra, right? But once you understand it, once you get a hang of it, you're like, oh, yeah, I might as well keep like a stock portfolio and a crypto portfolio on the side, and you keep generating returns for anyone. At the end of the day, when you go to sleep, like Warren Buffett said, right? When you go to sleep, money should work for you. And this is one of the ways you can do it, along with mutual funds and whatnot. So yeah, this is, yeah, thank you for your time. I'm sorry it took so long. It's like almost like 1 hour now. This is my LinkedIn, this is my email, and then I'm always happy to chat on. If you guys just want to rant about Meghnad Desai, I can do that.
Yes, QRS reactivating.
Yeah.
No shit, just search for Aditya Deorukhkar. And then, oh, this is what happens when we take things for free, right? And my profile is